Hey, realtors, buyers, this is Leo Noboa, NMLS 2098345, and I'm happy to present a new loan program that I received today. It's from the Texas State Affordable Housing Corporation, and it's a home buyer's down payment assistance program together with a mortgage credit certificate. Now, we'll get into what the mortgage credit certificate is a little later. But for now, the two loan programs that we have are the Texas Heroes Loan Program and the Sweet Texas Home Loan Program. The Texas Hero Loan Program is for police officers, firefighters, teachers, school nurses, librarians, etc. And the Sweet Texas Home Loan Program is for everyone else. Now, the minimum credit score that we need for this loan program is a 620, and there isn't a max debt to income ratio. Now, the mortgage credit certificate is basically a tax return from the federal government, reimbursing you 20% of the interest that you paid on your mortgage. Meaning that once you do your taxes, you normally receive a tax return, a tax credit, and you just have to make sure that you report your mortgage as an expense, and the federal government will reimburse 20% of the interest you paid as a tax return. Now, the down payment assistant program has two products. One is going to be a grant, and the other is going to be a 3-year deferred second lien. Now, the grant is essentially a gift. You don't have to pay the down payment assistance grant after you have made 6 payments. And the difference between that and the 3-year deferred second lien is that you don't have to pay the 3-year deferred second lien once you have lived in the property for 3 years. Now, the grant is only for government loans, FHA, VA, and USDA. And right now, the only down payment assistance that they are offering is 2%. In the past, and most likely in the future, they have and they will be offering 3, 4, 5%, just depending on what the market is looking like. Due to the market volatility at the moment, they're only offering that 2%. Now, for the 3-year deferred second lien loan program, um, conventional is accepted. So, government loans such as FHA, VA, USDA, just like the grant accepts, will be accepted, but also conventional loans are accepted. The only difference is that for conventional loans, you do need a FICO score of 640. Now, for the 3-year deferred program, 3% is also offered aside from the 2% at the moment. And also, just like in the past and also in the future, 4 and 5% will be offered. Now, we have different interest rates over here, and we're going to actually put into practice this theory right here so we could understand it a little bit more and we could explain it to our buyers and have them understand the benefits of these loan programs. So we're going to make an example with a conventional loan using uh, a property that we find on HAR. So first, we have to understand what the max income for the non-targeted and targeted areas are, and what is the max purchase price of a property. So in Houston, your max average monthly family income cannot exceed $110,250. Sorry, $110,750 in non-targeted areas, and in targeted areas, your average monthly family income could not exceed $124,040. Now, what we mean by non-targeted areas and targeted areas, we'll understand in this map over here. So, the shaded areas are what's considered targeted areas, and anything that's not shaded is considered a non-targeted area. So, a targeted area is an area where the average monthly income is lower than the 80%. And we're going to use an example of a property in South Houston. Let's use this area right here, this targeted area, and let's go to HAR, get that property. Let's zoom in. So we're going to look for this property on Faulkner Road, I believe it's called. It's off Scott. It's this property right here at a sales price of $250,000. So like I said previously, we are going to use a conventional loan program. And as we know, conventional loan programs have a maximum of a 97% loan to value, meaning a 3% down payment. So we have a sales price of $250,000 because the property on Faulkner Street is being sold for $250,000. Now, we want to get what the loan to value is going to be. So we take the $250,000 sales price, we multiply that by 97%, and we get a loan to value of 97%, and the loan would be $242,500. So we write that down as well. So we got a $250,000 sales price and a loan amount of $242,500. So we're going to need a 3% down payment in order to purchase this property. But in this scenario, your buyer does not have sufficient funds for down payment. This is where the down payment assistance program from the Texas State is going to provide. So, as we know, we are going to use the conventional 3% down payment assistance. It will give us a interest rate of 7.875 because our buyer makes 80% or lower of the average monthly family income in that area. All right, so let's go back to the property and back to our numbers. So our 3% down payment on that property would be $7,500. And the maximum down payment assistance that we can receive is 3% towards the loan amount. Not the sales price, but the loan amount. So as we know, our loan amount is for $242,500. And 3% of that is $7,275. But we need $7,500 for the down payment. So the state of Texas is going to provide us with this amount, $7,275. So your borrower will need to provide $225 for down payment. And that is far away. $225 is definitely far away from what they originally needed, which is $7,500. Perfect. So let's go and compare what that conventional loan with the FHA loan. So our borrower has a 640 credit score because he is applying for a conventional loan. Our home price is $250,000. All right, our loan type is the conventional 80% and below. So let's select this. And our assistance amount is going to be 3%. We want to max it out. So let's compare that to the FHA, 3% deferred forgivable, which means that they won't have to pay for that down payment assistance loan if they have lived in the property for 3 years. So let's compare the loans. All right, so here we have it. We have both loan comparisons. On the left over here, we have our conventional loan, and on the right here, we have our FHA loan. Our conventional loan will have a 7.875% interest rate compared to our FHA loan, which will have a 7.5% interest rate. So our total loan amount, as we know, is 242,000, which we had written down 242,500, and our minimum down payment required is 7,500, which we also calculated to be, and it is correct, 7,500. So the TSAHC assistance amount is going to be $7,275, which is 3% of the loan amount. So the amount of money that the buyer will need to bring to the table for their down payment is $225, which we have previously calculated. So the additional down payment that your buyer will need to bring is $225. Compared to the FHA loan program, which would be $1,385 and a few cents. So over here, your monthly payment will be $1,994.73. And the interest, the monthly principal and interest would be this amount. So now that we have mentioned the monthly principal and interest, I really want to get into what the mortgage credit certificate will be, because that is what will reimburse you 20% of your interest. So let's go to that. Here we have the calculator for the mortgage credit certificate. And as we know, our loan amount is going to be for $242. Well, sorry, $242,500. And our interest rate is 7.875. So 7.875 is our interest rate. And we want to make it a 30-year loan, 30-year fixed loan. So let's see what the amount of money your buyer will be receiving their first year. So let's say we see here that your buyer's tax return will have an addition of $3,805 on the first year, and consecutively on the 5th year, 10th year, and 30 year, this is the amount of money that they will be reimbursed. So at the end of the life of the loan, your buyer will be reimbursed $78,097, which is equivalent to 20% of the interest that they paid throughout the life of the loan. Now, let's say your buyer receives a credit refund of a federal tax refund of $2,500. So we have $2,500. That's what they normally receive on their tax returns. If we add $3,805, this is what they would receive on their tax returns due to the 20% interest reimbursement on behalf of the federal government. So this is essentially how the DPA, down payment assistance, and the MCC, mortgage credit certificate, function. I will be getting into more details in further videos. So if you do have questions in reference to this program, please contact me and I'll be happy to answer you or your buyer's questions. I really want to take advantage of this because right now in this market, sellers are giving sellers concessions. So the down payment assistance will cover your buyer's down payment, and your sellers will cover your buyer's closing costs. So essentially, your buyer will close on their house without any money at the closing table. Yeah, they might need to bring the additional down payment of $288, but it is much better compared to bringing, let's say, $11,000, $15,000. They enter their home and they gain equity, and if they stay in that property for 3 years, they no longer have to pay back that down payment assistance they received. Like I said, please contact me. You could email me at leonoboa@modelmortgage.com, or contact me via telephone 832-805-4103. And if you are seeing this via YouTube, social media, you could contact me via social media or just hit the comments and let me know what your questions are below. Thank you.